Video. Today we have a beast of a video because we will talk about the situation on the market. We are at a very critical stage. I will talk about the technical of the market. I will talk about the fundamentals, earnings, a lot of information. If you will like the video, please give me a like. I hope this video will really help you navigate the market. It's a beast of a video. So first of all, I did a study, and I studied that the S&P 500 since 2022 really followed an Elliott wave pattern, a perfect one. Let me show you what is the Elliott wave pattern. Let me show you what is the Elliott wave pattern. Yeah, it's that kind of pattern. So there is a moving, a first trend, there is a wave 1, wave 2, wave 3, wave 4, wave 5. They are divided in subwaves, and once that terminates, there is a correction wave. Here there are the conditions, and then yeah, there are the correction waves. Let me show you. Like, yeah, something like that. Wave 1, wave 2, wave 3 is the longest, wave 4, wave 5. ABC are the correction waves. So what we did, we perfectly had an Elliott wave pattern where the wave 3 was the biggest, wave 4, wave 5, the trend is ending, we have a correction, A, B, C. So guys, what is really critical for you to know is that there is still some room to complete this wonderful Elliott wave pattern. Because, yeah, the line A is equal to the line C. The sub-patterns are generally divided into 5 rows for the, let's say, for the small ones. So we have wave 1, wave 2. Sorry, that's the weekly. Let me put you the daily. Let me put you the daily. Yes, so that was the A, the correction one that started since January. Wave 1, wave 2, wave 3, wave 4, and wave 5. So what I expect now, let me do it once again. Within this ABCD pattern, sorry, we are supposed to have some smaller waves. Okay, it started here, wave 1, wave 2, wave 3. We probably gonna have a wave 4, and then we're gonna have a wave 5 that is supposed to end around 4,300. That is where the biggest wave is supposed to finish. If we consider this one a wave 4, the party is ended, guys. But generally the wave A should be as long as the wave C, so we probably have some room to go. But what is the bad news on the Elliott waves is that after the ABC correction is complete, the major trend then resumes. That's very bad, guys, because it means that after the wave 1, wave 2, wave 3 will be completed, and we get here, end of the party, the major trend will restart. Not gonna look good. And I tell you guys that for some time, this market can still hold. Let me show you why. That's a fantastic website. It's called maximumpain.com that indicates where are the put strikes. Let me show you. This is the SPY, is the ETF of the S&P 500, and let's have a look at yesterday. It shows it closed at 411. What happened? These are the puts that are open in the market. Generally, the small retailers are buying the puts and the big fishes, the market makers, are selling. If the price is closing here, right, it closes here, that means that all these put walls is expiring worthless. But on the other hand, these calls had to be paid because the price fell over this level. It's very, very critical because where you see very high amount of puts or of calls, in general, the majority of time are about to expire worthless. It's better than to sell puts or sell calls, but is more expensive. Buying generally is a bloodbath. So guys, what is the issue? If we look at the next weeks, if we look at the next weeks, for next week, that's why I believe we start the correction because there are more calls than puts. So I don't expect the market to be bullish. But then on the 17th is where if you were trying to buy puts in November, December, you could buy only for the 17th of February. There is a dramatic wall of puts. These are all going to expire worthless. So guys, it's unlikely, very, very unlikely that this crash or this trend will resume within the next 2 weeks. But then you need to think, guys, about what to do because I will show you data on the economy, I will show you some indicators that should really make you think. Let me show you. We are now in territory of extreme greed in spite of yesterday's drop, but wasn't a big drop compared to what happened, so there is still space to increase the greed. You need to be very, very careful. Warren Buffett says, be greedy when others are fearful and be fearful when others are greedy. You need to be extremely careful right now. And I want to show you that the yield curve, every time, guys, every time that is inverted, the difference between 10 years and 3 months, we went into a big recession. All the big market crashes were in those periods. So guys, that's a fantastic website. It's called yardini.com. It gives you so many useful information on the market. Here I took a lot of data that are very useful. Okay, performance, we don't care because it looks at the past and we are supposed to look at the future. P ratios, how things are cheap or expensive. Look, large caps, we are not cheap. Compare thinking that the curve is inverted, the economy is not looking good, is not cheap, is higher, is at 18, is higher than the average of the 2000s. It's apart from the crazily overvalued market of the 2020, but was different because the bond rates were at zero, so it's different. We are still overvalued for big cap. We are pretty cheap for small caps. So that's good. Probably this crash will not impact the small caps, but some small caps in an economy that goes in crisis will go bankrupt. So this will not make reference anymore. Big caps have performed much better, but that gap needs to lower. It can't expand forever. You see, when it expands, then it drops. So be very, very careful, especially with large caps, because it's about to close. Yeah, so I want to give you a very useful information. I think that there was Profit margins are going down. It's very bad. When margins go down, the stock market cannot go up. So guys, it's very, very critical. Grow versus value. Yeah, grow and value tends to converge. Earnings are getting reviewed to the downside. It's not good for the market. Yeah, 2023 earning getting reviewed to the downside, 2024 to the downside is never good. Look how it ended in 2009. And then guys, here bonds, there were a couple of useful information. Yeah, forward price to earnings, we are at very expensive level. For the big cap, the VIX is low. Generally, you want to buy when the VIX is high, not when the VIX is low, and not when it's about to come a recession. Need to be very, very careful, guys. And last but not least, I want to show you, for example, how high valuations are. For example, that's Nvidia. Look, that's a very useful tool that I use to invest. It's called Fast Graph. It shows me in green the earnings of the company and the price to earning that would correspond to 15 times the earnings, or to the average growth of the company. Nvidia growth 18% over time, so this tool would expect a price to earning of 18. The normal P ratio would be 35. We are now at a 64 P ratio with the company that is not expected to grow 64% at all, in extremely still overvalued territory. Not as much as in this bubble, but still not good, guys. And this one at least is expected to grow, because then there are companies who already said that they will not grow this year. For example, Intel. Please have a look. This company, we are paying over the historical PE, and the earnings are about to go down and down and down. That's the average price to earning that the market paid for Intel. They are gonna have a bad year. If I buy it here, I want someone to buy it here, with the earnings expected to go down. Very, very, very unlikely. More likely that someone will pay it over 20 or something before. Even scarier than that, Micron earnings expected to go down all the year, but price at high level of and this is even probably worse than this, because here at least the company was overvalued, but earnings were expected to go up. Here it's expected to be a bloodbath. So unless this is wrong, and in reality they will grow. But look, we have how many analysts that did this? We have 31 people that studied this company, listened to conference calls, and they said they are gonna earn minus 197%. All these people need to be wrong. And in reality, the company needs to do very well. Very, very difficult that someone will buy me the stock at these levels. So guys, coming back to the conversation, we are in a very dangerous market because we are probably at the end of this Elliott wave, and you need to be very, very careful in this time, because the major trend, as it's written here, after the ABC correction is complete, it will probably drop. Thank you guys, and have a great rest of the day.